Hello everyone, PS from PS Invest Plays here today. Over the years, AMD has made huge strides in the data center business against Intel. After jumping 38% between July and August, its stock has shed almost all its gains, and it has underperformed the markets this year. Is this trend going to continue, or we can expect higher stock price in 2021 and beyond? In this video, we will understand its business, its financials, its future outlook, review its chart using Elliott Wave to see how we can make money. So stick around, I think you'll like what I have in store for you today. Advanced Micro Devices, ticker AMD. AMD is an American multinational semiconductor company based in Santa Clara, California, that develops computer processors and related technologies for business and consumer markets. While it initially manufactured its own processors, the company later outsourced its manufacturing. AMD's main products include microprocessors, motherboard chipsets, embedded processors, and graphics processors for servers, workstations, personal computers, and embedded system applications. Despite a significant boost in AMD's commercial performance in fiscal year 2021, shares of the chipmaker have started to stall. AMD has performed greatly under the leadership of Lisa Su, who revived the semiconductor firm by introducing the Ryzen processor series in the computing and graphics business, and the hugely successful EPYC processor series in the data center server business. Because of the introduction of these processors, AMD has seen a surge in revenues in both the computing and graphics business and the enterprise business in the last 5 years. In the second quarter of 2021, AMD's computing and graphics revenues shot up 65% year over year to $2.3 billion, and revenues in enterprise surged 183% year over year to $1.6 billion. The 183% year-over-year growth in the business segment was driven by higher EPYC processor revenues and semi-custom product sales. Strong commercial execution, driven by new product launches and high demand for GPUs, resulted in record cash flow of $888 million in the second quarter, which calculates to a free cash flow margin of 23%. While AMD's commercial growth has been impressive, the stock's performance hasn't. The argument could be made that AMD deserves a pause after strong second quarter earnings pushed AMD to new highs. But the market now appears to have taken a much more cautious wait-and-see approach regarding AMD. This approach may be related to the AMD-Xilinx merger, which still awaits regulatory approval. However, AMD is poised to continue to grow rapidly in the future with or without Xilinx. The fastest growing business for AMD is not the computing and graphics business, although it generates the largest revenue share, but the server business, which relies on the relatively new EPYC processor series. AMD has made significant inroads in the server market since 2018 at the expense of Intel, and AMD's market share has seen continual growth, approximately 9.5% in 2021. AMD is not resting on its laurels, however, and is set to release a new Zen 4 AMD EPYC server chip dubbed Genoa in fiscal year 2022. which could make a splash in the market. The new server CPU will be based on 5 nanometer and will have up to 96 cores, promising even better performance. Because of accelerating EPYC Milan launched in 2021, sales and new server chip launches next year, AMD is looking at market share growth in the server business and even stronger free cash flow. Cornering 15 to 20% of the server market over a 5-year period is a possibility for AMD. Due to strong demand for high-performance GPUs, AMD has improving free cash flow prospects. AMD's free cash flow margin in the second quarter was 23%, indicating that the firm is already keeping a much larger share of revenues compared to the year earlier period, which saw a free cash flow margin of only 7.9%. Because of market share gains, strong GPU pricing, and accelerating revenue growth in first 2 quarters of fiscal year 2021, AMD raised its revenue guidance for the year and expects 60% year-over-year revenue growth in 2021. What the market gets wrong about AMD, besides focusing entirely on the Xilinx merger, is that if GPU pricing remains strong in fiscal year 2022, AMD could see fiscal year 2021-like revenue growth rates next year. Which is why I believe that revenue growth estimates, especially for fiscal year 2022, are on the very low end of possibilities. The estimates call for just 16% revenue growth next year, which, given the launch of new products, is a very, very low number. AMD deal with Xilinx could be cleared by as little as 2 weeks. Even a Phase 3 review is unlikely to delay it much past November. Also, Xilinx stock has traded at a huge discount to conversion price per its agreement with AMD, and the discount remained high even as the companies passed one merger milestone after another. With the deal expected to close in a few weeks and with all major contingencies except for China cleared, while the concerns about China are understandable, given the current political environment, there is no evidence that China may stop this deal. In fact, there is a greater than 99% chance of the deal closing. Even though Xilinx expands addressable market for AMD, without the merger, AMD is likely to grow much faster than Xilinx. In fact, a strong case can be made that AMD valuation is currently being dragged down by the merger with Xilinx. In addition, if the deal collapses, the merger arbitrage unwound will cause Xilinx stock to move down and AMD to move up. Looking at the financials for AMD, revenue, gross profit, EBITDA, net income, EPS, earnings per share are excellent. Even when you compare the financials against 2019, they have increased by a very good clip. In the chart on the right, free cash flow, FCF, currently stands at $2.01 per share. Based on the current price to FCF ratio, the stock is undervalued. In the chart on the left, price to earnings ratio, PE ratio, currently stands at 33.1. The PE ratio has been declining and EPS is increasing quarter over quarter, indicating again that the stock is undervalued. While it is true that AMD will face a couple of tests in the future, Xilinx merger approval, the market is wrong in focusing only on the risks, which appears to be the case here. Because of the upside in AMD's server processor sales next year, a generally strong pricing environment for GPUs, and the potential for gross margin gains, AMD's growth is undervalued. The 2 months decline in AMD's market value has lowered AMD's price to earnings ratio to 33.1 and the market capitalization to sales ratio to 6.8, which is based on a low revenue estimate of 16%. AMD could generate revenues of $22 billion in fiscal year 2022, implying 41% year-over-year growth and not 16%, which lowers the price to sales ratio to 5.7%. All in all, the future for the stock appears bright and it is extremely undervalued. This is also indicative in the charts where I see the stock price to decline slightly in the near term, but increase considerably in the next 2 to 3 years. Now, let's look at the charts for AMD. If you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Looking at the charts for AMD, the bull run that started way back in 2016 or 2015 is still not over. It has completed its first 3 waves, and now it seems to be in wave 4. If the price of the stock drops below $98, then I would expect the price to go down as low as $86.90, with strong resistance around $95 and support around $79. After this pullback is over, I expect wave 5 bull run to begin, which is an inverse 61.8% of waves 1 to 3, giving us a final price target of $161.78, which translates into a 78% profit in the next 2 to 3 years. Now, let's summarize. At its current stock price, I would recommend nibble any pullbacks and accumulate corrections. If the stock price reaches $98, then expect a pullback to approximately $86.90. $95 is very strong resistance, and $79 is a very strong support level for AMD stock. This is an excellent buy range, and if you buy in this range, I expect the stock price to reach $161.78 in the next 2 to 3 years, giving you a profit of 87%. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.